It's the fifth Monetary Policy Committee meeting of the year, and it looks like the 6 members will choose to cut rates this time around as well. At least an overwhelming majority of economists polled by Bloomberg seem to suggest so. But what's changed between the last policy and now is the corporate tax rate cut and its impact on the fiscal position. Hello and welcome to this special coverage on BloombergQuint. I am Neeraj Shah. Hi, Neeraj.
Hi, Neeraj. Also, what's also unknown is the quantum of the cut, given the 35 basis points cut the last time around. Well, we'll know for sure in the next 15 minutes or so. Let's welcome in Mr. U.R. Bhatt and Arvind Chari here in our studios, and Axis Bank's chief economist Saugata Bhattacharya and Ashutosh Khajuria of Federal Bank, who will be joining us from the respective offices. But first, Ira sums up the factors that will influence the MPC's decision today.
This is yet another policy meeting where the question is not if the MPC will cut, but by how much the MPC will cut. We will see rates most likely cut this time around, 110 basis points in rate cuts already. Over and above that, you will likely see a rate cut of at least 25 basis points. That is what a poll of economists is broadly suggesting. We're at 540 now. If you do 25 basis points, you'd come down well below that. But there is a range of expectations. Some people saying they may actually do 40 and round it off at 5. Some people saying they'll do 35. Remember, last time we got a 35 basis point cut, so that tried and tested formula of 25 or 50 no longer exists. So the expectation broadly is that you will see a rate cut somewhere between 25 and 40 basis points. Just stay with this chart for a minute because I think the language that will be used to argue a 25 or a 40 basis point cut would be very, very important. If the governor does 25, he will probably clearly indicate that there is more in the offing beyond the stance, which will remain accommodative. Now, if he does 40, will he give us a sense of how low rates can go in the current cycle? I think that's the question that everybody is asking. We used to have a benchmark of real rates, but the governor has now said more than once that they can't use that benchmark because they have a target of a headline inflation and they can't have multiple targets. So then how do we judge how low rates can go in this current cycle? Can they go to 4.5, even below that? I think that's the nuance that central bank watchers will be looking for if there is a cut, say, of about 50 or 40 basis points steeper than the 25 that is being expected. So that certainly is something to watch, the number, the stance, and then the nuance behind the stance as to where repo rates are headed in the economy. Now, obviously the big talking point will remain growth. Between the August meeting and this meeting, we've got the 5% shocker of a GDP number. Not everybody believes that things improved in the second quarter either, so you could see a weak second quarter number. Now, the complexity here is that the Reserve Bank of India kept its forecast at 6.9% for FY20. Nobody believes India can do 6.9% growth in FY20. Will the Reserve Bank of India peg down their forecast sharply? That has a little bit of a confidence impact as well when you see the central bank cutting growth forecast that sharply. So will they again remain on the higher end and say 6.5 and maybe miss their growth estimates for a second year running? We don't know. So we'll watch to see how they justify their growth rate expectation on growth and also what their analysis of growth is. Last time around, the governor said he doesn't believe it's structural. Since then, the annual report in the RBI has talked about a soft patch converting into a cyclical slowdown, but then it went on to say that structural changes are needed to get growth back up. So again, structural, cyclical, and the outlook for the economy will very much be in focus when the governor speaks and the MPC releases its resolution. Inflation, I'm not going to spend very much time because demand-driven inflation is very much at bay. Yes, there is a pickup in some urban food prices. Onions are in the headlines again. But if you're looking at the core inflation number, demand-driven inflation, that's been low. It's come off quite steeply as well. So I don't think there will be much angst on inflation as yet. But will there be angst on fiscal deficit? Now, that's another interesting and important question. Last time's monetary policy resolution stayed away from any debate on fiscal. Since then, two things have happened. One, of course, the tax cuts, which a lot of people can say is a structural change, is actually positive for inflation in the long term, positive for lower inflation in the long term. But there has been other developments as well, such as the shortfall on GST revenues continuing. We've seen GST collections come off quite steeply in the latest month to about 91,000 crore. So is the MPC going to take note of a possible fiscal slippage? Again, something to watch out for in both the resolution and the governor's comments that follow. Two other things I want to point out and things that will be watched out for both by the markets and by the banking sector. This is on liquidity and and credit. We've put these in one chart, but there are two separate things actually. On liquidity, now, we got the report that the RBI was working on, which was the liquidity framework report. That disappointed the markets because the markets thought that the RBI will move to a scenario where the liquidity stance moves along with the monetary policy stance. The RBI didn't do that. They said that they would prefer to see liquidity remain in a mild deficit, except if financial conditions warrant. So the market is now back to an uncertain scenario to see what financial conditions at the current juncture warrant. So they will be looking out for the word neutral, some assurance of neutral liquidity, at least in the current context. The reason I put the commercial credit chart here is because, the issues with the banking system have not gone away now for a good 3 to 4 year period. We've had problems in the commercial banks, the asset quality cleanup, then the shortage of capital in public sector banks, then the asset liability mismatches that cropped up in the NBFC sector, some issues of misgovernance in the NBFC sector, and now an issue with a cooperative bank, which, while not large, is not a segment that can be ignored. So we do want to hear from the governor and the RBI team as to how they are strengthening supervision in the banking system, giving out some confidence, which is crucial for the economy at this point in time. So lots to watch out for. Friday is when the Monetary Policy Committee delivers its decision and the RBI holds its press conference.
Okay, that's the sum and substance of what factors would be at the top of the mind of the, or would have been on the top of the mind of the MPC. We'll get to know the decision very quickly in about 9 odd minutes. Let's get in our guest now. You are part of Dalton Capital. Arvind Chari, he's the head of fixed income at Quantum Advisors. Shagata Bhattacharya, chief economist at Axis Bank, and Mr. Ashutosh Khajuria, chief financial officer at Federal Bank. Gentlemen, all of you, thank you so much for taking the time out and joining us. Mr. Bhatt, let's start off from a market's perspective. They've quietened down completely. Both the bond markets actually, the bond yields came off a bit today, but the equity markets quietened out before the policy. Do you expect anything in the policy that could change the sentiment for the markets at large?
Well, a 40 basis point cut might actually give a flip to the market.
Is that the hopeful, Mr. Bhatt? Or?
No, I don't think it is. Probably it's not warranted, but I think a 25 basis point is what everybody is factoring. But given the fact that now the governor has said that 25 is not sacrosanct, it could be 27 or 23 or something like that. I don't know. But something in that range is what is probably expected. But 40 is an outside possibility, but 40 is something that will probably buoy up markets.
Arvind, you have a pretty wide range, 15 to 50, anywhere between that.
Yeah, I gave that range 15 to 50 is because they started with this 35. So as he said, this 25 is no longer sacrosanct. So it could be 15 to rounded off to 50 for two policies. It could be 25, it could be 35, it could be 40 or 50 actually also. But the important thing is
there a need for that much?
There is space. As we've been saying that monetary policy space exists. So their 1 year ahead CPI forecast last time was 3.6%. Maybe it might inch up a bit because vegetable prices have gone up, but that's kind of cyclical. So even from that level, you could well be below 5% repo. But the more important thing is whatever they do, they need to communicate it well. Like last time they did 35, but the governor's comments that 50 might have been too excessive. Yeah. Kind of you saw the bond market pushing back on their rate cut, terminal rate cut expectations. So even though they might not go below 5% repo, but they have to keep communicating and giving the belief to the bond market that, if inflation remains at 3.5%, 3.6%, and more importantly, as we discussed last time when I was here, their growth expectations is what is going to determine whether the repo ends at 5 quarter, 5, 475, 4.5. So last time they reduced the GDP growth expectation by only 10 basis points to 6.9, and nobody's expectation was anywhere close. So this time you have to see whether they go and project the GDP growth estimate below 6.5, because if you look at in the new series,
is the consensus closer towards 6?
It's between 6 and 6.5. Very lot of consensus estimates are at 6%. So if you look in the new GDP series, the potential GDP, as you will call it, is between 7 and 7.5. So if the RBI projects GDP growth below 6.5 and expects the CPI to remain at 3.5, 3.6, then the market will always believe that even though RBI might cut only by 25 today, but there is scope for more to come. And then that's how the bond markets get anchored towards a lower repo rate. And then, as we've been speaking, term premiums will sort of compress for a bit.
Mr. Khajuria, what's your reckoning? The What's the quantum of cut that you expect? The governor has, of course, said that the RBI doesn't need to do anything for banks to do any kind of further cuts as well. But having said that, what's your expectation?
See, there is a change from what had happened in August. I think when the earlier policy review happened, we didn't have the GDP numbers for Q1 available. That was one point, and another one which is an important thing to look into is that we did not have this 1st October onwards, effective 1st October, the retail loans being priced with respect to the external benchmark. So these are two major changes, and post this, we are having this review. So I think whatever cut now happens would immediately, at least to a good chunk of the liabilities of the banks as well as the assets, particularly the retail loans, it would have the immediate transmission. And I think last review mentioned of, shifting focus towards growth. So if that continues, I see anything between 25 to 40 basis points as a cut. I think as multiples of 25 are no more sacrosanct, so it could be anything between 25 to 40. But if it's 40, then probably, bond market may not react too aggressively to that, because probably they would think that it's done. And now maybe further cuts are not expected. But if it is 25, certainly they would be expecting more cuts to come. And accordingly, the shape of the yield curve would come out.
Right. So, Agatha, I just want your sense on, whether or not the RBI taking a slightly larger cut makes sense right now, because the case is really strong for the RBI to fully accommodate the fiscal push. Otherwise, the higher bond yields will undermine the fiscal push that the government has given. So, in light of that, do you feel that the cut could be slightly larger in nature?
No, I agree that anywhere between 25 and 40 is potentially possible, maybe even 50. I mean, it depends, because none of us has talked about one of the key numbers that you will see in the policy, all the expectations, the survey's expectations, which we do not know as of now. So the MPC members would have seen the results of the surveys, the capacity utilization, the household confidence, business confidence, household inflation expectations, etc. All the other data we know. And as usual, their projections will speak far more loudly than their words in the statement. So we are all waiting to see what the growth projections, inflation projections will be more or less on track. The same things that they had said the last time round, H2 3.5 to 3.7, maybe a little bit on the higher side. But the extent to which they take down their growth projections, maybe anywhere between 6.5, 6.6, maybe even lower, with downside risks particularly, I think that will signal more than anything that they say in the statement. How much more they will have room, how much will be the need for further rate cuts. However, having said this, our own sense is that the Q2 GDP numbers will be better than the Q1 numbers, the unexpected 5% growth that we had seen. And given that, our sense is that it's probably best to front load the cuts as of now. The risks, all of us know, I mean, the results of the fiscal stimulus, etc., all of these we know. But I think I expected 25, but it's potentially possible that they go down even as much as 50.
Mr. Khajuria, just come in. What would you anticipate in terms of a GDP cut from the RBI this time around? Last time it was just a 10 basis point cut from 7% to 6.9%, but 6.9 also looks highly unrealistic at this point for FY20. What's your sense?
I think after Q1 numbers are out, they may further revise the GDP growth expectations. It could be another 10 basis points cut as far as RBI's expectation of GDP growth is there. So I think looking into that, and of course, the good part is that purchasing power would come to the farm sector in days to come. Kharif output is going to be quite good. And because of late rains, there is going to be enough soil moisture which would result in very good Rabi crops, unless the nature has something else and this thing, and you have the late winter hailstorms and all that. If nothing of that sort happens, then I think this could be one of the best Rabi crops you would ever had. So I think with this, with the built-up of expectation of the two coming harvests, I think there would be more of, say, exuberance, and there could be more of consumption in days to come. So I see, I mean,
we have news at hand. I'll have to come in out here. The policy statement is out. The rate cut has happened. This is the alert, of course, but the rate cut has happened. Monetary Policy Committee cuts the repo rate by 25 basis points to 5.15. And I think the growth forecast, if I'm not wrong, has also been cut. So that's the other piece of news. To 6.1. That's realistic, but it's steep compared to what was. So we got these two big statements. First, initial thoughts from all our experts. Mr. Butt, quick opening thoughts. The policy cut, but more importantly, the growth forecast cut.
The policy cut 25 basis point, I think, is par for the course. The market was expecting that. And now, since the transmission battle has been decisively won by RBI, so they have to be alert to the fact that if it is more than that, I think banks' profitability will be dramatically hit. So therefore, 25 basis point is right. But 6.1% is very realistic. But I think it probably sort of shows that they were very wrong in the past when they were talking of 6.9. And I don't think a revision of this magnitude has happened in recent history. So, but at least they are very realistic. I think that's good.
Yeah, and they've said various high-frequency indicators suggest that domestic demand conditions have remained weak. Business expectations index of the RBI, of the Reserve Bank's industrial outlook survey, also shows muted expansion in demand conditions in Q3. So I just want to quickly run you through. So while they've reduced the GDP numbers for the year to 6.1%, they made it 5.3% in Q2 of 2019-2020, and they've got a range of 6.6 to 7.2% the second half of FY19 to FY20, with risk evenly balanced. So this is what you've got in terms of their GDP forecast. In terms of their inflation outlook, that's not really changed much. CPI inflation was projected at 3.1%. It's between 3.5 to 3.7% for the second half of FY19-20. But I think Ira is joining us from the RBI headquarters with the quick takeaways. Ira, over to you.
All right, quick summary of what has been done and what has been said. Firstly, you've got a 25 basis point cut that brings it down to 5.15%. Naturally, the stance has been maintained at accommodative, but your guests over there will be able to back me up on the language of that stance, because this time around the MPC says that it will continue with an accommodative stance as long as it is necessary to revive growth while ensuring that inflation remains within the target. If memory serves me right, last time around they did not reuse the terms as long as it is necessary. So perhaps they are trying to convey a little bit of urgency, but I could be wrong on that one. Sharp cut in growth forecast, come down from 6.9% last time around to 6.1% this time. There is a fair amount of worry both within the MPC statement and the accompanying monetary policy report on growth. I'm just going to give you a few of those snippets. Firstly, in the MPC resolution, they say that the negative output gap has widened further. They talk about the fact that the government initiatives are likely to help spur a little bit of private consumption activity and strengthen private investment as well. But they go on to say that the continuing slowdown warrants intensified efforts to restore the growth momentum. If you read through the monetary policy report which accompanied the MPC statement, there they talk about the fact that the near-term outlook for growth is quote-unquote fraught with risks. And the risks that they talk about naturally are private consumption, which we've all been talking about since we got the last GDP print. They talk about the weakness in the employment intensive export sectors and the real estate sector, and say that those have not been satisfactory in terms of performance, which then bears down on consumption activity in the economy as well. On inflation, not much change, although they do note the recent pickup in food inflation. That's why there's a minor uptick on the inflation projection for Q2. I believe the second half inflation projection has been maintained, so no major change coming in there. Quick note of the voting pattern. All members voted for a cut. Ravindra Dholakia, though, voted for a higher than expected 40 basis point cut. Anything material other than that is in two parts in the statement on development and regulatory policies. One, in their effort to continue
continue with improved credit flow to the economy. They have raised the lending limit for microfinance firms from 1 to 1.25 lakh per eligible borrower, but they have also increased the income threshold for both rural and urban areas. So that may be some marginal impact that would happen. And then a recent report on the Usha Thorat Committee on offshore rupee markets. Their 2 recommendations have been accepted, but not the big ones. They are allowing domestic banks to freely offer foreign exchange prices to NRIs out of their Indian books. They're also allowing rupee derivatives to be traded in the International Financial Services Center. Over to you guys. We'll come back to you with the governor's press conference.
All right. Thanks a lot for that, Ira. So that's the sum and substance of what the RBI has done this time around, a 25 basis point cut. So Agatha, quick comments from your side.
So as we said, so the growth projections, together with what Ira just said on the language, as long as it's necessary, copying the European Central Bank, and warrants intensified actions. So together with the statement, I think the terminal repo rate, which we had initially expected at 4.75, particularly given the 3.5 to 3.7% inflation, which would translate to about a 3.4% average growth, average inflation for FY20. I think they have indicated, they are signaling that they have significant room more to cut the repo rate. And obviously, I mean, as banks begin to transmit together with the repo and with the liquidity, which I expect would be relatively far more surplus in FY20 than it was in the previous year. I think altogether, I think from the monetary policy side, they aim to support the fiscal policy much more aggressively than we had initially thought.
Which clearly comes out in their statement, as they have said that they with the inflation expectations remaining below the target price, and also the fact that you've seen negative output gap, which is widened further. So they're going to do as much as they can to make sure that they spur growth.
So as we said, the taking down the GDP growth. If you look at their H2 forecast of last time was 7.2 to 7.5, which has now come down to 6.6 to 7.2. Which is where their negative output gap is coming about. That's a big thing. So if it remains at that level, or if it lowers further, that would mean that further monetary space exists. This is good signal for the bond market, because now you know that the RBI is forecasting lower and expecting that demand conditions and growth conditions are weaker. So you should expect some more rate cuts to come through, which would mean that the bond markets, which have traded at a significant term premium over the last 2 years, will sort of, bond yields should come off, expecting some more rate cuts to go through. Initially, if you look at, most people had terminal repo rate expectations at about 5%. After that 5% GDP growth target, many had pulled it down. So now many more will start believing that maybe 4.5 is the terminal repo rate. So bond markets will have to get anchored to that. So that's a positive. I don't think equity markets will like it as much, but I think equity markets already factored in slower revenues and slower profits. So any monetary policy benefits that comes through. And as Saugata pointed out, the linking to the repo rate would mean that this transmission will be almost immediate. So as and when the repo rate gets cut, your lending rates will actually fall by similar amounts, if not.
So I want to comment on that. So while you're talking about transmission, monetary transmission has remained staggered and incomplete as per the statement. And they've said after a cumulative policy repo rate reduction of 110 basis points during February and August, fresh rupee loan rate transmission by commercial banks actually declined by 29 basis points. And on outstanding rupee loans is increased by just 7 basis points during.
So that's the issue of ALM, right? So as your liabilities reprice lower, is when the banks will start passing. So this process
will take time.
If without the repo rate linking, would have taken 6 to 9 months. With the repo rate linking, I think it will be slightly more faster now. And you also have to realize that liquidity will remain in excess of almost 1% of NDTL right throughout. It's been like that, and I think it will remain for the next 3 to 6 months. So.
I just want to come back to Mr. Bhatt on how the markets would take this focus of the policy. But somehow, Saugata, to you first, the annual report had suggested that there was words like the soft patch the economy seems to be in, which could be moving towards a cyclical slowdown. Now there seems to be an acceptance of the fact, and enough and more statements out there wherein they're saying that there is weakness in the employment intensive export sectors and real estate, and the fact that we need intensifying of efforts to make sure that while private consumption and investment happens, the other factors need to come to the fore. There is acceptance of the fact this policy seems more not like inflation targeting but growth targeting, so to say, Shogata.
No, it is, because I mean, remember that growth and inflation will have a link. I mean, it's not as if growth will not influence inflation. You're absolutely right that this statement does indicate that an acceptance of certain structural factors, because exports is definitely, given the current global environment, exports has more structural features in it than cyclical features. But together with this, my own sense is that the 25, despite the extent of the slowdown that they're signaling, the fact that they have cut only 25 now, as of this point in time, indicates that they are also uncertain about the effects of the fiscal stimulus measures that they have done, and of the risks, the geopolitical risks, global financial market risks, and particularly, I mean, domestic financial stability risks that might now be playing out in the system. That was what surprised me, given the extent of the slowdown that they're signaling, that they have chosen to cut only 25.
Yeah, I don't know if it means keeping some ammo for later, or maybe the acceptance of the fact that there are some variables which might not be completely comprehensible right now, if I can use that term. Mr. Butt, we've spoken about the bond markets and what they could do. Arvind mentioned that there is probably a chance for the bond markets to be happy and yields could move lower. What about the equity markets? They probably didn't expect too much, but the fact that the RBI has gone out and said that growth is 6.1, which would mean that the realistic assumption on growth would anyways be sub that any which ways. Would you think that this policy would be more disappointing than otherwise? And would you want to hear something from the governor in the 45-minute long conversation which might help markets in any fashion?
Well, I think he can talk up the markets quite a lot by saying, say, for example, that there is a lot more scope for interest rates to come down. And probably sort of qualifying the 6.1%.
He's kind of stayed away from making those statements in the past policy. He's not giving an indication of what happens in the future.
This is not said that this is the end of the road, like what he did probably last time. So that is one. Plus, even 6.1% GDP growth, he can probably qualify, saying that is subject to revision based on the next sort of output of results. But I think the market has already factored all this, because market knows that September quarter results are not going to be very rosy. I think one important thing probably we are missing now, post-October 1st, when most banks, at least public sector banks, have said that their interest rates are going to be off, say, repo rates. I don't think, say, for example, a 20-year, a 25-year long housing loan can be priced like that, because the margins on that are not even 25 basis points generally. So if from today you cut it by 25 basis points, I think the whole system will go for a toss. So I think this insistence, because finally banks are commercial entities, they are not NGOs. So therefore, if you say that one line of business is not going to be profitable with effect from today, I don't know how banks are going to react, because finally the liabilities are repriced over a long time.
Sure.
So therefore, you are saying that your assets should be repriced immediately by 25 basis points. So some of the lines of business will become not profitable from today.
Unviable completely, yeah. By the way, just to mention, the government will start speaking, but the bond yields have hardened a bit, 6.63 odd. They were volatile, 6.63, and the bank nifty has completely come off. They're now 1% lower. A sharp vertical drop in the bank.
I think that was what was being suggested, that probably no commentary on the fiscal side, and how accommodative they could be of the fiscal push. And this is exactly what I asked Saugata, that you would actually see a reflection in terms of the bond yields moving up, which would undermine the efforts that the government has done with regards to the fiscal push that they've given. But I think we should just about have the governor starting to talk in just a few moments. But
yeah.
I think
Arvind, you want to come in with a quick comment? We'll have to cut to him, of course, when he starts speaking, but something that you want to hear from the MPC.
I think
something that I want to hear, again, communication. So why they did 25, they've cut the GDP forecast. Why they did 25,
sorry, we'll have to cut across to the governor.
How much more they did.
Okay, good morning. I'll make the usual customary statement in the beginning, following which we will have questions and answers and other comments by me and my colleagues. Over the past 3 days, that is during 1st, 3rd and 4th of October, the Monetary Policy Committee discussed and evaluated the recent macroeconomic and financial developments and the outlook. Taking into consideration all available information and analysis, the MPC voted unanimously to reduce the policy repo rate by 25 basis points, with 5 members voting to reduce the policy rate by 25 basis points. The MPC also decided to continue with the accommodative stance as long as it is necessary to revive growth, while ensuring that inflation remains within the target. I would like to express my gratitude to the MPC members for the discussions we had and their deep insights and experience, which are reflected in the policy decision and the resolution that has just been released on the website of the Reserve Bank of India. I also want to thank our teams in the RBI for their continued high-quality support to the MPC's deliberations with their hard work, research and logistics. Let me begin by giving a brief overview of the salient aspects of the MPC's deliberations. In its view, the global economy has lost further momentum since August 2019 meeting of the MPC, with trade and geopolitical tensions purveying heightened uncertainty. Among advanced economies, the slowdown in the second quarter of calendar 2019 appears to have extended into the third quarter as well. For emerging market economies, the worsening global economic and trade environment is weighing upon their macroeconomic performance. Crude oil prices were pulled down by softer demand and adequate supplies until mid-September disruptions in refineries in Saudi Arabia, but normalization has occurred faster than expected. Global financial markets have remained unsettled, with bouts of volatility in response to pessimism over global growth prospects. Against this backdrop, central banks across the world are becoming increasingly accommodative in their monetary policy stances, aided by benign inflation conditions. With regard to domestic economy, the slump in real GDP growth to 5% in the first quarter of 1920 has been followed by generally weaker high-frequency indicators for the second quarter. Industrial production was lower in July 2019 on a year-on-year basis, pulled down mainly by manufacturing. The production of capital goods and consumer durables contracted. The output of 8 core industries contracted in August, with production of coal, electricity, crude oil and cement decelerating or going into contraction. The manufacturing PMI for September 2019 was flat, though still in expansion zone. High-frequency indicators suggest that services sector activity weakened in July-August. Indicators of rural and urban demand continued to slow down in July and August. The Reserve Bank's Consumer Confidence Survey also shows weak consumer sentiment, especially relating to non-essential items. On the positive side, there has been a rapid catch-up in the southwest monsoon rainfall after an initial delay in its onset. By September 30th, 2019, the cumulative all India rainfall surpassed the long period average by 10%, while the first advance estimates of major kharif crops for 2019-20 are only 0.8% lower than last year's fourth advance estimates. The prospects for Rabi 2019 season have brightened, with live storage of water in major reservoirs as on September 26, 2019 being 115% of the live storage of the corresponding period of the previous year and 121% of average storage level over the last 10 years. Abundant rains in August and September has also led to improved soil moisture conditions in most parts of the country. Overall, Indian agriculture is well positioned to lead the recovery, which augurs well for rural employment and income and the revival of domestic demand. In the industrial sector, consumer non-durables, intermediate goods have posted sustained expansion during 2019-20 so far and have emerged as potential growth drivers. Moreover, manufacture and construction sector activity look somewhat better in August as per the IIP data. Among services sector indicators, domestic air passenger traffic also accelerated in August. Turning to external sector, with merchandise imports contracting faster than exports, the trade deficit narrowed during July-August 2019. Higher net services receipts and private transfer receipts helped contain the current account deficit to 2% of GDP in Q1 19-20 from 2.3% a year ago. On the financing side, net foreign direct investment rose to $17.7 billion in April to July 2019 from $11.4 billion a year ago. Net foreign portfolio investment, excluding the voluntary retention route, was of the order of $3.3 billion during April-September 2019, as against net outflow of $11.5 billion in the same period last year. Net disbursals of external commercial borrowings rose to $8.2 billion during April-August 2019, as against net repayments of $0.2 billion during the same period a year ago. India's foreign exchange reserves were at $434.6 billion on October 1st, 2019, an increase of $21.7 billion over end March 2019. On the inflation front too, there have been positive developments. Consumer price headline inflation has moved in a narrow range of 3.1 to 3.2% between June and August. While food inflation picked up, fuel prices moved into deflation. And inflation, excluding food and fuel, softened in a broad-based manner in August and offset the firming up of food prices. Inflation expectations of households rose by 20 basis points for the 1 year ahead horizon, but this possibly reflected households' adaptive expectations in response to the rise in food prices in recent months. Manufacturing firms see weaker pricing power in Q3, which renders the outlook for selling prices benign. Overall, liquidity in the system remained in surplus in August and September. Reflecting easy liquidity conditions, the weighted average call rate WACR traded below the policy repo rate in August and September. However, monetary transmission remains work in progress. As against the cumulative policy repo rate reduction of 110 basis points during February to August, the weighted average lending rate WLR on fresh rupee loans of commercial banks declined by 29 basis points. Taking into account these developments and the impact of recent monetary policy rate cuts, the MPC has revised CPI inflation projections slightly upwards to 3.4% in Q2 19-20, but retained its projections for H2 19-20 at 3.5 to 3.7%. For Q1 2021, inflation is projected at 3.6% with risks evenly balanced. Real GDP growth for 19-20 has now been revised downwards from 6.9% in August policy to 6.1%. That is 5.3% in Q2 19-20 and the range of 6.6 to 7.2% for H2 19-20 with risks evenly balanced. GDP growth for Q1 2021 has also been revised downwards to 7.2%. Noting that the output gap has widened since its last meeting, the MPC was of the view that continuing slowdown warrants intensified efforts to restore growth momentum. Recent measures announced by the government are likely to help strengthen private consumption and spur private investment activity. With policy space available on account of inflation expected to remain below the target in the remaining period of 19-20 and Q2 and Q1 2021, the MPC decided to reduce the policy rate by 25 basis points and continue with the accommodative stance as long as it is necessary to revive growth while ensuring that inflation remains within the target. Now I shall address some of the developmental and regulatory policy measures undertaken today for strengthening regulation and supervision, broadening and deepening of financial markets, and improving the payment and settlement systems. On regulation and supervision, microfinance institutions play an important role in delivering credit to those in the bottom of the economic pyramid. Accordingly, the household income limit for borrowers of non-bank finance company microfinance institution, that is NBFC MFIs, has been increased from the current level of 1 lakh for rural areas and 1.6 lakh for urban and semi-urban areas to 1.25 lakh and rupees 2 lakh respectively. Furthermore, lending limit per eligible borrower has also been raised from rupees 1 lakh to 1.25 lakh. These measures are expected to boost MFI lendings to the bottom of the economic pyramid. In the area of financial markets, some of the recommendations of the task force on offshore rupee markets, you are aware that we had constituted this committee under the chairmanship of the former Deputy Governor of RBI, Usha Thorat. Now, some of the recommendations of this task force have now been accepted. Accordingly, domestic banks will be allowed to freely offer foreign exchange prices to all non-residents at all times out of their Indian books, either by domestic sales team or through their overseas branches. Also, rupee derivatives with settlement in foreign currency will be allowed to be traded in International Financial Service Centers, IFSCs. Other recommendations of the committee are under consideration. The scope of non-interest bearing special non-resident rupee, that is SNRR account, has been expanded by permitting persons resident outside India to open such accounts to facilitate rupee denominated external commercial borrowings, trade credit and trade invoicing. Furthermore, restriction on the tenure of SNRR accounts, which is currently 7 years, will also be removed for these purposes. On payment and settlement systems, several measures have been announced. First, collateralized liquidity support, which is currently available till 7:45 p.m., will now be available round the clock on all NEFT working days in order to facilitate smooth settlement of National Electronic Funds Transfer, that is NEFT, on 24/7 basis for members of the public from December 2019. This will help in better funds management by the banks. Second, in order to strengthen the grievance redressal mechanism for customer complaints, it has been decided to institutionalize an internal ombudsman scheme at the large non-bank prepaid payment instruments, that is PPI issuers. These are entities who have more than 10 million prepaid instruments outstanding. Third, in order to increase digitization in Tier 3 to Tier 6 centers through wider acceptance infrastructure, and as indicated in the Payment System Vision Document 2021 of RBI, and also recommended by the Committee on Deepening of Digital Payments chaired by Sri Nandan Nilekani, it has been decided to create an Acceptance Development Fund, that is ADF. Fourth, with a view to expanding and deepening digital payments ecosystem, it has been decided that state and UT level bankers committees, that is SLBCs or UTLBCs, shall identify one district per state or UT on pilot basis in consultation with the banks and stakeholders to make it 100% digitally enabled. The identified district may be allocated to a bank with significant footprint in that district. This would enable every individual in the pilot district to make or receive payments digitally in a safe, secure, quick and affordable and convenient manner. Thank you. Just. I think we should just go, follow some order. What I will do is I'll call out one by one. Just please, I'll call out one by one. So as you know, we will, everybody will get a chance to ask questions. So let's follow some order. Yes.
Yes, Governor, thank you. This is Govardhan from the Economic Times. The MPC acknowledges the government's measures to spur demand and private consumption, but it is silent on what its impact would be on the fiscal deficit, and it's going to have almost 1.45 lakh crores dent on the revenue. Did MPC deliberate about this issue, and if it did, and what is the outcome of that? Thank you.
You see, at this point of time, it may be noted that government has made a statement that they will adhere to the fiscal deficit of the current year. So we have therefore no reason to doubt the commitment of the government to maintain the fiscal deficit number as given in the budget. And this I would say because, as you know, government has several sources of revenue. So whatever shortfall is expected because of the announcement of the corporate tax rate cuts, government have the option of increasing, making it up through other sources. But since government have come out with a statement and going by the past track record of the government, we have no reason to doubt the statement of the government, and we go by the statement made by the government that they will maintain the fiscal deficit. Yeah, thank you. Yeah.
Lata Venkatesh from CNBC TV 18. Further to the question on fiscal deficit, will the open market purchase policy of the Reserve Bank be only to ensure adequate liquidity in the bank system, or will it also be to force further transmission because the market may worry the yields may be pushed up because of fiscal deficit fears?
You see, OMO is basically a liquidity instrument, and in our internal working group report, it has been also stated that now the RBI has several instruments to infuse liquidity. We have the OMOs, which has been there already, so that remains in our in our toolkit. Then we have the currency, the forex swap, which we have introduced last year. Then term repo is something which has been also added this year in the internal working group's recommendations. So therefore, so far as RBI is concerned, OMO will be done to deal with the liquidity situation, either infuse liquidity or to suck out liquidity. And in any case, RBI doesn't manage yields. Yields are market driven.
Okay, so the internal working group recommendations are accepted in that?
No, internal working group recommendations have now been, these are, let me clarify, these are recommendations of the internal working group, and they do not represent the institutional position of the RBI. The internal working group recommendations are now placed in the public domain. We will receive the comments and observations from public and all stakeholders, and they will be taken into consideration. Then we will decide on the final framework. Please.
Sir, प्रदीप पंड्या, CNBC आवाज से. सर, पैराग्राफ 22 में आपने जो कहा है कि MPC decided to continue with an accommodative stance as long as it is necessary to revive growth. इससे आप क्या संकेत देना चाहते हैं? ये खास तौर पे इसलिए रेलिवेंट है कि पॉलिसी के पहले जिन काफ़ी लोगों से हमने बात की, उनका कहना था कि 5% के करीब आप पहुंच जाएंगे अब, और 4.75 जो हिस्टोरिकली एक लो है, उसके नीचे जाने की जगह नहीं है. तो क्या इस स्टेटमेंट से आप और MPC ये संकेत दे रहे हैं कि पॉलिसी रेट के लिए ऐसा कोई लोअर बाउंड एज सच नहीं है?
नहीं, पॉलिसी रेट कितना मतलब लोअर बाउंड है, इसके बारे में हम वी हैव नॉट सेड एनीथिंग. व्हाट वी वांट टू से इज दैट वी आर गिविंग सम काइंड ऑफ, ये एक तरह का आप मतलब फॉरवर्ड गाइडेंस इसको मान सकते हैं, दैट द पॉलिसी रेट as long as the growth momentum remains as it is, until the growth is revived, RBI will continue to remain in an accommodative mode. And इसका ये मतलब उससे आप नहीं निकाल सकते हैं कि मिनिमम रेट क्या है, minimum repo rate कहाँ पे जाके RBI will take a pause. It is not possible to comment on that at this particular point of time. All that it says is to give a clear indication that RBI will continue with the accommodative stance as long as it is necessary, and as long as it is necessary to revive the growth momentum.
सर, क्या जो हिस्टोरिकल लो है उसको एक लोअर बाउंड के तौर पे आप देखते हैं, या MPC देखते हैं या नहीं? नहीं,
लोअर बाउंड के बारे में मेरे लिए अभी कुछ कहना पॉसिबल नहीं है. That will again depend on deliberations of the MPC. अगले जो MPC का deliberation होगा वो decision लिया जाएगा.
Sir, this is Anup Roy from Business Standard. Government is now asking 30,000 crore interim dividend from the RBI, but we understood from Jalan Committee report that there will be no concept of interim dividend. Can you please clarify?
You see, I have only also, as you said, that you saw it in the media, I also saw it in the media. I am not aware of any such demand from the government for payment of interim dividend.
Governor Swati Khandelwal from Z Business. मेरा सवाल है, आपने 25 बेसिस पॉइंट जो कट किया, मार्केट की एक्सपेक्टेशन 40 बेसिस पॉइंट थी. क्या वजह रही दैट आपने 40 बेसिस पॉइंट तक नहीं सोचा जाया जाए, क्योंकि अभी भी रिवाइवल ग्रोथ हम नहीं देख पा रहे हैं. तो क्या आपको लगता है 25-40 की तरफ जाना क्यों नहीं हुआ? पहला. दूसरा, ये आपने 110 बेसिस पॉइंट की बात की अभी तक जो है, और मॉनेटरी ट्रांसमिशन आपने बोला वर्क इन प्रोग्रेस है. कब तक आप एक्सपेक्ट करते हैं स्टैगर्ड और जो इनकम्प्लीट है ये अलाइन हो जाएगा? बिकॉज वहाँ अगर होता है तो हम ग्रोथ रिवाइवल की बात कर सकते हैं, क्योंकि अभी भी क्रेडिट ग्रोथ अपटिक नहीं देख पा रहे हैं हम बैंक्स की. तो आप उनको क्या कह रहे हैं?
सी, हमने एक फॉरवर्ड गाइडेंस मैंने जैसे कहा कि वी हैव गिवन ए क्लियर इंडिकेशन दैट द अकोमोडेटिव स्टैंस जो है वो कंटिन्यू करेगा. और we have now cut the policy rate by 110 plus another 25, so 135 basis points. So one has to also see its impact, and it does take time for the impact to filter into the real economy. So therefore we'll have to see the impact of all these policy rate cuts. We'll have to also see how the fiscal measures which government have taken over the last few months in 3 separate installments, and then of course the corporate tax rate cut. So how these impact the real economy, and at this point of time 25 basis points was therefore the call which the RBI took, which the MPC has taken. Michael, you would like to add anything to this?
Okay.
Right. Thank you. I think let me come this side now. Yeah.
Governor, I was going to say you obviously prefer the right of centre. so I'm going to ask you a slightly different question.
We have to be on right lines always.
So I wanted to ask you, Governor, something that has not been discussed. Is that was there any discussion at all in the MPC about the ongoing NBFC crisis and what happened in the Punjab PMC Cooperative Bank? And in hindsight, since it was a scheduled bank, did the RBI really, could you have done it better, because you had CRR, you had SLR, you also have lender of last resort because it was a scheduled bank. And we saw in a very similar, much larger private bank, RBI did manage what was virtually a run on the bank. So could we have avoided the kind of panic and the worries now? See, it may not be warranted, but there are genuine worries about the strength of the banking system, including commercial, cooperative banks, private banks, district cooperative banks, everything. So was there any discussion of that? Because if we don't have financial stability, then there's inflation growth, everything becomes quite meaningless. So was there any discussion?
You see, these points which you mentioned about the banking sector or cooperative banks or NBFCs, this is not within the purview of the MPC. So therefore, MPC does not discuss these issues. But since you have raised the point, I would like to say that so far as RBI is concerned, as we see it, in fact, I would like to make it very clear, and as we have already issued a press statement sometime last week, I just want to preempt some of your questions. Let me say that the Indian banking sector remains sound and stable, and there is no reason for any unnecessary panic. In fact, sometimes unnecessary rumors can create a panic situation. So through you, I would like to appeal the members of the public and all depositors not to believe in such rumors. Our banking system remains sound and stable. And with regard to cooperative banking sector, as you pointed out, individual cases, it's not proper for me to discuss. And in any case, this case is already under investigation of the Economic Offences Wing. But having said that, let me make a mention that as soon as, this issue came to our notice, RBI has acted very swiftly and very promptly. On 23rd, it came to our notice just a few days before we appointed the administrator on 23rd. And in the last 12 to 13 days after appointment of the administrator, you have to see what RBI has done. We have appointed the administrator. We have appointed, now we have declared that we are going to have an advisory committee. We have reviewed the liquidity position. The administrator internally has reviewed the liquidity position. Based on that, we have announced first, the withdrawal to be enhanced to 10,000 per depositor. And now yesterday, and yesterday to 25,000 rupees per depositor, and number of other steps we have taken. A complaint has been filed with the Economic Offences Wing, and so number of steps have been taken, and RBI has acted very swiftly. And again, to preempt one more question, let me say that one incident cannot be used and should not be used, we feel, to generalize about the health of the cooperative banking sector.
Question, sir, was would liquidity support followed by a PCA have been a better way of ensuring that we didn't have this kind of adverse public fallout?
You see, where PCA is required, RBI will, where PCA is appropriate, that is prompt corrective action is appropriate, RBI will use the PCA framework. And recently, again, to preempt one more question which may come up, let me say that one private sector bank we have placed very recently, we have placed it under our prompt corrective action framework. And on this, again, because of various kinds of reports that are being, various reports which are now coming out, let me say that prompt corrective action framework is nothing new. In the past, RBI has put banks under prompt corrective action to ensure that timely steps are taken to put the bank, to bring the back on rails. When there are certain deviations from certain, regulatory framework, we put a bank under prompt corrective action, and the prompt corrective action involves that the bank is required to take certain steps to correct those regulatory deviations or deficiencies. So therefore, this is nothing new, and it is a kind of a corrective measure. It gives an opportunity to bank to correct itself, and that is how it should be seen. And wherever PCA is required, wherever our criteria demands that the PCA framework is required, we will use the PCA framework. Where other measures like administrative appointing an administrator is concerned, it will be used in appropriate cases. Yes, please.
May I follow up on this? Therefore, should one assume, since this particular bank has been put under PCA, it was to get a lot of capital if it were allowed to merge with India Bulls? Should we therefore assume that RBI has taken a call that that merger is not coming?
No, I think it's a speculative question, and as long as the decision is given out in the public domain, it is not correct on our part. And as long as we decide and we let out the decision in public domain, I would not like to comment on this individual proposals. And as I have said, individual cases, this is not the right, it's not proper to talk about individual cases in a conference like this.
Sir, on cooperative bank,
I'll come back.
Thank you, Governor. Mayur Shetty from the Times of India. So you had recently said about the limited fiscal space available with the government. And after that, there has been the corporate tax cut, and also we've seen GST numbers coming down. So do you think there is any fiscal room going ahead, or will all the work have to be done by RBI?
No, I think your main question relates to the economy, reviving the economy. And I think government has announced 3 rounds of measures. They have announced a very big, the corporate tax rate cut is a very big measure which they have taken. And it is definitely overall, I have on record, I have said that it is net positive for the economy. And again, you are bringing back the fiscal question. Government has said that they will stick to the fiscal deficit, and I have no reason to doubt that. Yes, please.
Governor Ira Duggal from BloombergQuint. Sir, actually, allow me 2 small questions. One is on growth. You've come down to 6.1 from 6.9. Dr. Patra will correct me, but in recent memory, I can't remember such a sharp cut from the Reserve Bank of India. The MPR gives some analysis, and one thing it does say is that there is weakness in employment-intensive sectors. Does the RBI believe that there is a significant part of the growth slowdown which is coming in from wages, employment growth? The other problem, and again, the MPR...
No, I missed that last part of the question because of some disturbance here.
Should I start again?
No, just the last part.
I just wanted to know whether the RBI believes that a large part or a significant part of the slowdown is linked to employment generation in the economy and wage growth in the economy, not just in rural areas, but also in urban areas. And the other problem is on the chart which shows the flow of financial resources to the commercial sector. There is again a sharp drop in the April to September period compared to last year. With credit growth not picking up from banks, leave alone non-banks, how does the RBI intend to correct both price and availability of money?
You see, price is a function of the market. Price is a function of the market, and so far as we are concerned, to ensure better transmission, we have come out with this external benchmark requirement. Now that is already there. And with regard to the slowdown, whether it is due to decline in income, both rural and urban, I think it is very clearly explained in the minutes of the resolution of the MPC, and rural demand or the urban demand contraction is a reflection of various factors. It could be sentiment, it could be stress on income, it could be falling domestic savings. So it's a complex set of factors which is reflecting upon this. Michael, would you like to supplement this? That's it.
Hi, sir. Bijoy from Cogensis. Just two questions. One is on transmission again. In the NPR, you actually note that the small savings are again impeding policy transmission. And we note that existing outstanding loans, the price has actually gone up in the period that you all have actually cut your repo rate by 110 basis points. It's gone up by 7 basis points is what you calculate. Is there any way you can convince the government to actually stick to the formula that they had accepted on small saving schemes? Because they clearly seem to be playing to a different tune than the formula itself. And on the second question on offshore markets and non-resident rupee account, if you could just clarify on whether this is because increasingly the pricing of the rupee seems to be driven by external factors like NDF, which is why you all have decided to open up and first set up the Thorat committee report and now gradually opening up so that you can attract investors into rupee market.
You see, on the first question with regard to the small savings, I have earlier said that on various issues the RBI is engaged with the government on discussions, and all these discussions are internal, various issues, and that would obviously include the small savings rates. And with regard to the other question, the second question which you asked, you see the NDF market, it was developing offshore. And the size of compared to the offshore market, the size of the Indian market was shrinking. So therefore, that issue had to be addressed. And second issue is that, India is now getting increasingly integrated to the global economy. And so therefore, it was necessary for us to, look at the changing environment and ensure, that India responds to this, its growing integration to the global economy. And also we have a roadmap for gradual capital account convertibility. So all these aspects have been kept in mind. That is why this committee was constituted. We have a very cautious path, a careful and cautious, a carefully drawn path in this direction. So this is basically a consequence of that. Yes.
Thank you, Governor. Manojit Saha from The Hindu. I also have two questions. One is that the growth has been revised by 80 basis points. It's very sharp revision. But why the rate cut was only 25 basis points? 25 basis points is the usual rate cut. Last time it was 35. So why only 25? Because you have it seems you are very concerned about growth. The second question is that this bank in question was hiding NPA for the last 8 years. Why was RBI unable to spot that something is going wrong in the bank?
See, again, individual cases I would not like to comment. We are looking into all aspects of this particular bank which you are mentioning, and the matter is now under investigation by the Economic Offences Wing. So therefore, at this point of time, I would not like to go into further details. And with regard to 25 basis rate cut, you have to see it on the back of 110 basis points which has been done. So it is 110 plus another 25, so it is 135, and over a period of between February to October, so which is about 8 or 9 months period. So you have to see that, and I think I have already answered that question a little while earlier. Yes, please.
Sir, Gopika from Mint. I have two questions as well. One is, what is the impact of corporate tax rate cut? Has RBI done any study to assess the impact of the corporate tax rate cut on the economy? And second is, you said we shouldn't single out a cooperative bank, but history has shown that there have been several failures in the cooperative banking system. So how many more failures is RBI willing to allow before you initiate a conversation or discussion with the government to amend the regulations around cooperative banks?
You see, RBI would not allow a cooperative bank to collapse. cooperative banks develop their own problem because of so many other factors. So, you know, when you say that RBI would allow, I mean, RBI obviously cannot allow a cooperative bank to collapse. And the discussion with government with regard to the regulatory provisions of cooperative banks, which, as you know, are, you know, different from the other scheduled commercial banks. So that is an ongoing process. That is a continuing process. We are in discussion with the government. Let me come back to this side. Yeah.
Sir, you know, in the last few years, you know, PNB scam has happened, you know, before last year. Last year, again, IL&FS happened. Then this year, again, PMC has happened, actually. So is RBI trying to do something about fixing the supervisory inspection mechanism?
You see,
one more thing, you know, is there any accountability fixed at the regulatory level, actually?
You see, so far as supervision is concerned, we have already announced formation of a separate department for supervision and building up a separate cadre of officers for supervision. So the department has been formed and it is work in progress. And so therefore those steps have been taken. And with regard to fixing up responsibility, I have mentioned that all aspects of this PMC bank issue is being looked into. And at this point of time, it will not be, you know, I will not be able to go into further details.
Governor, coming back to the fiscal question, how worried are you, at least the market seems to be very worried about the crowding out effect that this corporate rate tax will have on the fisc? That's one. And the...
No, but as long as the fiscal deficit is maintained,
yeah, but
so the crowding out effect does not, you know, I mean, there is no, the facts, it doesn't alter. Whatever was the effect, it is the same.
So you
and over the past few years, RBI as the debt manager has ensured that the borrowing program of the government goes through in a very non-disruptive manner. So that will be it will continue to be so.
Right. And the other question was, we've spoken about the shadow banking issues time again we've met. When do you see the worst is actually over? Because we're seeing fresh skeletons coming out almost on a daily basis, if not weekly basis.
No, you see, I have answered this question earlier. The NBFCs, you know, sector, and now the HFCs, which has now been transferred to RBI for regulation purposes. We are monitoring the top NBFCs very closely. We are our supervision, our supervision and monitoring is very close and intense with regard to the non-banking finance companies. Now, so therefore, at this point of time, you have to also keep in mind that, based on our 7th June circular, wherever there are, signs of some default or some signs of stress, the banks are also now signing intercreditor agreement and they are dealing with such cases. And overall, NBFC said, the NBFC sector remains under RBI's very intense and close supervision. You would like to add anything? Yeah. I think.
Hi, sir.
Acha, okay.
Okay. Sorry. Hi, sir. Pandika from Money Control. So I have two questions, both regarding the asset quality of banks. The health of the banks. So you said we should not actually take one incident and generalize it to the entire segment of the banks, but it has.
I said that with reference to the cooperative bank, failure of one.
Yes, yes. Yeah. But it has actually triggered a lot of fear in the depositors for cooperative banks because this bank appeared to be very healthy. It was posting profits, and all of a sudden, all of this comes out. So, my question is that does an incident like this warrant a change in the way these banks are actually regulated? Would RBI prefer that cooperative banks is completely regulated by RBI and there's no shared authority here?
You see, have you completed?
There's another question.
No, let me answer one by one.
Okay.
So, you see, every such incident is an experience. So based on this experience, we will give a fresh look at the regulatory framework that is in existence, and if any changes are required, we will take it up with the government.
but RBI favors that it should be completely brought under.
No, I would not like to, I cannot say what we will favor. It will depend on the outcome of our review.
Okay, understood. The other question is about the government's efforts. So one of the measures that they announced was that banks, including private, public sector and private, would both be setting up these loan fairs to push out credit growth. Now, what we've understand from the past experiences, these kind of activities are actually driven by targets, even at the branch levels, and there's less thought given to the due diligence. And there is, so is there a risk for asset quality coming out of these? This kind of measures?
If you see the government circular which has been issued, the government letter which has been issued to the banks, it does make a specific mention that the banks are required to follow the prudent lending principles. The term they have used is prudent lending principles. The government have highlighted that, and so far as RBI is concerned, during our supervision and during our interaction at my level, either in a group or individually, in every interaction with the chiefs of public sector banks as well as private sector banks, we do emphasize the need for a prudent lending.
Governor,
I think she wanted to ask something, then I'll come this side.
On the cooperative bank side, again, in the public mind, the distinction between the inspection and audit doesn't exist. So they're looking at the regulator to be performing probably an audit, not just an inspection. So that is one part. Couple of policies ago, RBI had asked cooperative banks to come forward and convert to small finance banks and things like that, but not a single cooperative bank seems to have come forward. Is there anything that you can do to engage with the government and the state governments to get this whole cooperative bank system changed? Because on their own, they don't seem to be coming forward to change anything.
You see, I mean, I think you have yourself answered the question. On their own, they have not come forward. And cooperative banks, the structure of cooperative banks, they are not shareholders, they are members. So therefore, that is the big difference, and there are legal issues also involved. But I earlier mentioned that we will look at the existing regulatory framework of the cooperative banks, and based on our internal review, whatever changes are required to be undertaken, we will take it up with the government.
Governor, lending.
Please. I'll come to one by one again.
One follow-up question.
I'll come back to you.
So
Yes.
Anand from
I'll come there.
Anand from Business Today. So just one question on this deposit insurance cover. I mean, is there a case for a higher, deposit insurance limit? Because it hasn't been changed for the last 26 years.
There has been this demand in the past as well, but the extent of deposit insurance cover, there are many elements that get into it in terms of how much percentage of deposit should get covered, how many percent of depositors should be covered. So there are many factors that will determine that. So there have been studies based on that, and of course it's still no final decision has been taken.
Has DICC ever recommended?
I'll come that side. Yes.
So I just wanted to know if the RBI has undertaken an assessment of the risk to the financial system from real estate, and I mean direct bank credit given out by NBFCs, which also then has an impact on banks who have lent to them, and also the bond markets where investors would have invested in direct real estate paper and NBFC paper linked to real estate.
So I just wanted to add to that, sir, because lately in the last week, especially after PMC's exposure to one real estate company, this is a fresh reason to sell both the equity and the bonds of the private sector banks. I mean, their bond yields have also shot up, their prices have come down. So is there any move by RBI or government to tackle the underlying realty issue?
Underlying?
Real estate issue.
You see, with regard to the real estate sector, we annually, it, every 6 months we come out with that financial stability report. And as a part of the financial stability report, all these issues are internally analyzed. And
across all segments of across all segments, banks, NBFCs plus bond market together.
No, I mean, all segments are now, whether together or separately, I can't say. But all these aspects are analyzed, and because of the evolving situation, there are certain, sectors which require more intense analysis or scrutiny. So it is a part of our financial stability internal studies, and we are looking at these issues. Yes, please.
Hi, sir. Bhavik Nair from the Financial Express. Now, regarding the offshore rupee markets, we have seen that according to the BIA survey, the NDF volumes have increased dramatically over the last few years. Now, you have accepted 2 of the recommendations by the task force. Do you think these recommendations would be enough to kind of bring those overseas volumes onto the onshore? Because we have come to a stage where the NDF is kind of driving the onshore rupee market.
Okay, have you concluded?
Yes.
Yeah.
And
You see, there are totally 10 recommendations which the committee has made, 10 major recommendations. And I did mention that the other recommendations of the committee are under examination. They also involve some amount of consultation with, some amount of consultations with government, some amount of consultation with the banks and with the market players. That process is on. So the remaining 8 recommendations are very much on our table and they are under consideration. As and when we'll decide, we will start issuing it, we will start issuing the circular as and when we decide.
And
Yes.
just one more question, sir. Do you see any possibility, either this fiscal or the next, that there would be a possibility of a sovereign bond issuance?
I think this question should be asked to government, and recently I think the Secretary Economic Affairs has made a statement in this regard. So beyond that, I am not in a position to add anything,
Sir, Ashish from PTI. Just a small thing, you mentioned about RBI acting swiftly in wake of the PMC issue discovery. So in the past, we have seen various other moves, including mergers of banks being undertaken so as not to affect the depositor trust. In this case, why was this particular way of dealing with the crisis chosen? I'm asking this especially with the hindsight sort of knowledge of how the depositors have reacted.
You see, every case is unique. You cannot, generalize and say that, one instrumentality or one method which was used in a previous case has to be repeated here again. Every case is unique. And based on the facts of this particular case, we have acted in the manner that we have. And we have acted very quickly as soon as it has come to our notice. We have acted very swiftly, and if you see, I spelled out the actions which have been taken in the last 10 days, and in the press note which we have issued yesterday, we have also said very clearly that the RBI sort of is continuing to monitor the situation, keeping in mind the interest of the depositor as the highest priority. I think we'll have to now conclude, so just 2-3 more questions, I'll come back.
Governor, we've been told that you recently met with some investors when you were in Singapore. This is for the global bond index. India wants to be a part of some global bond index. Just wanted to understand, has India officially started lobbying for this? And how many years down the line would we see something like this happen?
See, my meeting in Singapore, I think about a month ago, was not for inclusion of India in the global index. It was a general, interaction which we do time to time. We do interaction in Mumbai also. And I did one interaction earlier, I think in March, in Hong Kong with the investors, and this was a part of that process of interacting with the investors in various locations. And Singapore, there are lots of funds and other investors which are based in Singapore who invest in India. Yes, please. I think we have to now come to some because
just one question.
Yeah, please.
Jagdeep Chima here from BBC News. You've downgraded the growth forecast to 6.1%. How concerned are you about global trade spats? And especially between the US and India at the moment, and what effect
US and
India, and what effect that has on India's growth?
No, I think US-India at the moment as we are talking, I think the US Commerce Secretary is on a visit to India, and both the Commerce Secretary and the Indian, the Commerce Minister have made statements that they're looking for early resolution. So I'm not privy to the discussions that are ongoing. And so far as India-US trade issues are concerned, I am quite confident that they will get resolved pretty fast. Yes.
सर, अब तक के जो रेट कट्स हुए हैं, सुभाष की न्यूज़ नेशन से हो, अब तक के जो रेट कट्स हुए हैं उसका ट्रांसमिशन ग्राहकों तक जाए, इसके लिए कोई मॉनिटरिंग हो रही है?
नहीं वो तो मैंने कहा ना, एक्सटर्नल बेंचमार्क हमने इंट्रोड्यूस किया है, वो तो कॉन्स्टेंटली रेगुलरली मंथली बेसिस में हम मॉनिटर करते हैं उसको इंटरनली कितना ट्रांसमिशन हो रहा है. आई थिंक वी हैव टू कंक्लूड.
सर लेंडिंग कैप फॉर एमएफआईज आपने बढ़ाया है 1.25 लाख. स्मॉल फाइनेंस बैंक्स के लिए कुछ हम इस डायरेक्शन में देखेंगे, वहां पर कोई चेंज नहीं.
एक तो अभी हुआ है, तो जब हो जाएगा कुछ स्मॉल फाइनेंस बैंक में, यू विल कम टू नो अबाउट इट. आई थिंक जस्ट आई थिंक विद
You have been monitoring the top 50 NBFCs quite closely in the last 9 months or so, but so there have been some defaults in the recent past. What are the probabilities of any one of the top 50 NBFCs that you are monitoring going to default in the next few quarters?
No, you see, I have said it earlier that it will be, I'm just repeating what I said earlier. It is our endeavor to ensure that we do not encounter failure of another large systemically important NBFC. So with that objective, we are monitoring them, and wherever required, we are, calling the management of those NBFCs, having dialogue with them, and taking issues forward, how to resolve the issues. And in some cases, I mentioned that the banks are also signing intercreditor agreement as per the 7th June circular, and trying to sort of restructure that particular loan.
Governor, one quick.
I think I'll have to conclude.
One quick question on the GDP estimate. Is it again consensus, or is there, because there's no voting over here that you tell us about in the statement? Because the monetary policy report is a little bit more downbeat. It says near term more downbeat. It says near term outlook is fraught with risks. So for next year, it says GDP.
No, it is unanimous. I mean,
6.1 is
there are so many deliberations which take place within the MPC, but finally we all converge.
So there's no voting on that.
No voting on the growth forecast or the inflation numbers. But I can tell you that everybody is on board, and everybody is not only on board, but everybody is okay. All the members of the MPC are okay with these numbers. The growth as well as inflation.
सर आपने जो एक एश्योरेंस दिया और एक अपील की लोगों से कि वो रूमर्स पे ध्यान ना दें, एक रिक्वेस्ट है आपसे कि आप उसको हिंदी में अगर दोहरा सकें. और दूसरी बात, क्या आप ये कह सकते हैं कि किसी और कोऑपरेटिव बैंक में लोग इस तरह से फंसेंगे नहीं, क्योंकि अब दूसरे कोऑपरेटिव बैंक से भी लोग पैसे निकाल रहे हैं. इवन प्राइवेट सेक्टर बैंक्स को लेकर वहां से पैसे निकाल.
आप देखिए, प्लीज डोंट पुट वर्ड्स इनटू माय माउथ. मैंने जैसे कहा अंग्रेजी में, उसको हिंदी में मैं कहना चाहता हूं कि इंडियन बैंकिंग सेक्टर जो है वो साउंड एंड स्टेबल है. आई थिंक जैन साहब आप उसको हिंदी में बोल दीजिए, वो ठीक रहेगा.
आप कहेंगे तो ज्यादा बेहतर होगा.
नो, साउंड एंड स्टेबल का हिंदी टर्म मेरे आ नहीं रहा. आप बोलिए,
फिर वो चलेगा.
बोल देगा. नहीं, मैं बैठा हूँ ना विथ माई
सुदृढ़ है.
आप बोल दीजिए हिंदी.
नहीं, जैसा गवर्नर ने कहा है और हमने अपनी एक स्टेटमेंट भी दी है कि बैंकिंग सेक्टर पूरा ही सुदृढ़ है, और अभी जो हमारे पास डेटा है उससे हमें कोई ऐसा इंडिकेशन नहीं मिल रहा है कि जिसमें कोई वरी हो. अफवाहों पर जाने की ज़रूरत नहीं है. यही हमारी अपील है सभी से कि अफवाहों के बेसिस पर आप कोई एक्शन ना लें.
Thank you.
Sir, congratulations for a plastic-free folder and a plastic-free water bottle. Are you all off plastic water bottles?
Yes, we have decided, and we have in fact issued a circular internally for doing away with this single-use plastic. Yeah.
All right. Well, humorous in parts and non-committal in parts, but that's the 51-minute press conference from the Reserve Bank of India.
Which is pretty much very similar to all the previous press conferences.
Yeah, well, we've gotten some answers, we don't have some, but I guess that's the nature of the beast, I would say. Quick opening thoughts from our experts, because you can opening thoughts on the statement as well. We got some, we haven't gotten some, but anything that stood out of the press conference. If I can start with you, Arvind, this time.
So one thing important for me was their comment on that they will remain accommodative as long as growth remains below target. So there are two ways to see it. They've taken down the GDP growth forecast to now 6.1. So if it remains at that level or if it's lower, then markets should expect that more rate cuts will flow through. On the flip side, if their estimates are below and the growth actually recovers, everybody hopes for a second half recovery in everything, right? And it actually recovers and the numbers are higher. Maybe markets will then dial back rate cut expectations, saying that now that the growth is above RBI's 6.1 growth forecast, they might not need to be as accommodative. They'll still remain the accommodative stance, but the extent of the terminal repo rate cut, as I've been saying, whether that is 5, 475, 4.5, will depend on data points that come about on growth. Most frequency indicators will point out that recovery sooner, but the GDP growth estimate will have to be looked at. So that will be the play for the bond markets and for the equity markets in terms of how the growth, if and how the growth rebounds, and how the RBI reacts to that change in GDP forecast.
Mr. Bhatt, about the microfinance institution and the raising of the lending limit from 1 lakh to about 1.25 lakh for an eligible borrower. How big is this? Is it an incremental positive?
I don't think it's going to be a deal breaker or anything like that. It's just a marginal increase. So therefore, I don't think that's going to change anything much, except that they are sort of becoming more like sort of small finance banks now, and maybe commercial banks eventually. I think that is probably that is it. And 25,000 here or there, I don't think it makes a huge difference. To the business potential is huge, and they are addressing the lower end of the spectrum. And I think they would continue to be there. And I think it's probably just in tune with the inflation that has happened since they first got the license.
But on that base, to get this increase and then therefore the ability to mine the same customer, but you understand this very well because you've been on a board of banks as well. You don't think it's a big deal?
I don't think it's such a big deal because it is just sort of accommodating inflation, nothing really much more. But they are still addressing only that segment of the market. And I think they're specialists in that segment and they can continue. And they have the wherewithal to do it and the distribution expertise to do that.
Right. Okay. The bank Nifty as we speak is down about 1.14%. So that's weakened a bit more, 325 points given up. And the first cut came in post the announcement of the 25 basis points rate cut. And then from there, tried to pick up a bit, but once again, weakness has gripped at least the Nifty Bank. Ashima Goel, member of the Prime Minister's Economic Advisory Committee, now joins us on the phone line. Ms. Goel, thanks very much for taking out the time. A quick take from you on the comments of the governor, him talking about being accommodative, keeping in mind growth has been coming off, and the 25 basis point cut. Was that anticipated?
Yes, he has made it clear that they are on an accommodative path. So therefore, future further cuts can be anticipated. They want to wait and watch for the effect of their past cuts. But my own view is that if you look at it from an academic point of view, then our real rates are too high for an inflation targeting regime where the output gap is large and negative and inflation is below target. So there was room to cut more even today. And since we are not seeing any recovery as yet in high-frequency data, I would have preferred a 40 basis point cut. But it is all right since they are meeting bi-monthly. In December, they will take a call. The new GDP numbers will come in also by then. I think this meeting and the governor's comments were dominated by the stability of banks. And there he has made it very clear that they are closely monitoring all corporate banks and NBFCs, and they do not see any reason for worry. I think the data is showing some sort of turnaround in the NBFC liquidity issue also. So we should be going up from here overall.
Yeah, also the fact that there was a sharp decrease in growth estimates to 6.1%, and in light of that, then front-loading a larger cut, would that have had a meaningful impact?
Yes, I personally would have preferred a larger cut. I think that a larger cut would have been more appropriate, but then central banks are conservative and move slowly. So they have taken this call. And it's not just the central bank, it's the Monetary Policy Committee, so we should accept their judgment. And the point, they meet 6 times a year, so it's not, they can always do more within 2 months. They're probably waiting for the GDP data to come in November.
Ms. Goel, a couple of pointers that came out, statements came out, seem to suggest that the RBI is now concerned about the fact that the government's efforts would probably bring out the private consumption and private investment, but intense efforts need to be made to revive growth in the other aspects as well, which typically don't move in a hurry. Would there be a belief that growth might just linger at these levels for a bit longer than what the markets would ideally like?
Yes, I think the steps that the government has taken have been more on the supply side, and they're in consonance with reforms and a long-term view. So they're good for the economy from the long term. But I think the RBI's report had indicated that this is a cyclical slowdown. And when you have a cyclical slowdown, you need counter-cyclical policy. And since there's limited fiscal space, what the government is doing is largely tweaking here and there. They cannot do anything very major since they can't, they're bound by FRB and they can't undertake a large fiscal deficit or very sharp tax cuts or expenditure increases. So the space is there with monetary policy. And they have acknowledged that growth is much below the output gap, much below potential. The output gap is large and negative. Therefore, there is space with them to cut now. And I mean, if the economy has not turned around, I think a further cut would have been beneficial for demand. That would have been a good counter-cyclical measure today.
Ms. Goel, were you expecting the governor to address the elephant in the room, and that would be the impact on the fiscal deficit on the back of the corporate tax cuts by the government, but that didn't actually come about?
No, I think he said, and correctly, that the government has indicated that they are sticking on this on their announced fiscal consolidation path, and they have not raised their borrowing plan either. So it is true that the government has many different sources of revenue. So even if there's a slowdown on GST collections, there are tax cuts announced for corporates. It's a long year. They will. I believe there already there's some railway corporation. They have sold some shares and had a very good response. So they will start this kind of privatization, asset sales. We don't know what will happen to their revenue. If there is some recovery, then tax collection could also improve. Then we have the Finance Commission coming in. Let's see what they have to say on this issue. So there are a lot of uncertainties this year, but the past record of the government does show that they are very committed to maintaining fiscal deficit on their FRBM path. Like I think as plan, we cannot depart from it. Therefore, there is no reason to worry that fiscal deficits will widen.
Okay.
Yeah?
Ms. Goel, one last question, please. There were two questions asked to the governor on the real estate sector and whether there should be any worries thereof, because the yields on some of these companies have spiked quite meaningfully, and the lenders as well to that space. He seemed to suggest that all is well and there are no immediate big concerns. Would you, but the belief in the market seemed to suggest, and the bond yield seemed to suggest that that would not be the case. Would you second that thought, that there's no immediate need for any big panic in the market?
You know, I think that there is learning after every incident, and what has been riling markets is that there's one incident after the other. But I think we should take this positively, in the sense earlier these sort of things used to be kept under the carpet. Now they're coming out. And in response to each event, systems are strengthened. So, and the markets have been able to absorb so many, starting with Z and so many Reliance, so many incidents in NBFC, the ILFS itself, without any major kind of breakdown. So our markets are maturing, and I personally believe the corporate governance is improving. All these incidents does not imply corporate governance is poor, but that the regulators and the audit, etc., is bringing out more things, and the system is being cleaned out and being made more robust. So any one particular company or a particular real estate company will not be able to bring down the financial system. If there is anything, it can be, the system is complex enough and sophisticated enough to absorb it now. I don't think there is any cause to believe there's a systemic risk here.
Yeah, got that. Ms. Goel, thanks very much for joining us. Appreciate it.
You're welcome. Bye.
Bye. Saugata is also here with us. Saugata, your key takeaways from the announcement, and probably for the rest of the year, how much do you think is left on the table for the RBI?
So again, I mean, the language of this statement itself is very clear. That the MPC decided to continue with an accommodative stance as long as it is necessary. That's a very significant statement. I mean, it signals almost a Draghi-like commitment at the ECB to do what it takes to support the euro. So it's almost on the lines of that statement, I mean, which is a huge confidence booster, I think, to the efforts to continue growth. Now, I mean, we'll need to wait and watch. From my own perspective, when you get the Q2 GDP results, in November, my own expectation is that growth will probably be stronger than what we are currently expecting, definitely stronger than the 5% Q1 growth. And if inflation remains soft, which there is every reason to believe that inflation will not spike up despite the temporary transient move in onion and some vegetable prices, I think there will be room to cut. We wait and watch. I mean, there are so many other factors in play. I mean, if there's a trade resolution between the US and China, I mean, if the Brexit happens in a smooth manner. So there are multiple global and domestic ifs that need to be resolved going forward. Our own growth expectation for FY20 is 6 to 6.4, which is slightly higher midpoint than what the RBI projects. Given all of this, I think they will need to cut. They will cut. At least by another 15 to 25 basis points. I mean, the terminal repo rate that we were earlier talking about, the 4.75, they will probably take it down to that level in steps, watching how progression happens. And the biggest worry that I had in this context, the reason why growth expectations are low, is that credit is not happening. Credit offtake is not happening. So if with the benchmarking of rates and with the easy liquidity condition, credit flows begin, then I think we can begin to expect a growth recovery in the next 2 or 3 quarters.
Okay, Shagada, we'll leave it at that. Thanks much for taking the time out and being with us and giving us your thoughts. Appreciate your time. Mr. Bhatt, the bank Nifty hasn't taken this well now. So the equity markets by themselves are not taking it well, but the banks are 530 points down. So this whole negative movement that we've seen all of this week continues, and it's actually making the biggest move in today's session. What happens next? I mean, post-policy, is that stoppage that the markets would have anticipated the MPC to give not coming, leading to this?
Well, I think one is probably the market expected a 40 basis point cut, and it did not happen. But I think more importantly, specifically for banks, I think the issue is one of their profitability. I think this linkage, direct linkage to repo rates, which are finally administered rates. They're not market determined rates. So administered rates, so therefore we are going back to the same administered interest rate of the 60s and 70s. So therefore I think we're in fact going there. So therefore I think bank profitability, and suppose, I mean, now he's talking about more accommodative stance. Suppose in December he cuts another 25 or 40 basis point. What will happen to bank profitability? So I think that is what the market is worried about. And so therefore, I mean, now that led by State Bank, everybody else is now saying repo linked interest rates. I think that is what is really worrying the market.
Okay, I think we have a phoner of Mr. HP Singh, but Arvind, quick 10-second comments. Anything else that stood out for you before we get to Satin Credit Care?
I think there's enough to keep the bond markets expecting for more, given that accommodative for as long as Saugata said, like a Draghi comment, accommodative for as long. So I think we'll have to see data dependency. We still believe that there will be some improvement in GDP because you've seen excess liquidity for almost a year now. That should sort of feed into demand-led sectors, plus interest has also come down. But there is enough for the bond market to remain happy.
All right. We leave it at that, gentlemen. Mr. Bhatt, as well as Arvind, appreciate you taking out the time and spending the afternoon with us. Mr. HP Singh, Chairman and Managing Director of Satin Credit Care, is joining us on the phone line from Delhi. Mr. Singh, thanks very much for taking on the time. You know, the increment of the lending cap from 1 lakh to 1,25,000 for an eligible borrower, what does that do?
See, actually increases our reach. You know, if we really look at it, I think the borrowers who were not able to come within that fold, with this increasing lending limit, I think, we'll have more growth possible, and more so specifically in the rural space. I think, if you look at it, the earlier limit of 1 lakh of rupees being increased to about 1.25 lakhs does give us a better reach, large number of borrowers to be taken into the fold of microfinance, and I think that is where we stand right now. And as well as the household limit incomes, which have increased the urban space from about 1.6 lakhs to about 2 lakhs now, also gives us that better reach even in the urban and semi-urban areas.
Mr. Singh, so when you're talking about a better reach, is this something that you're talking about with regards to, existing customers who are capped at that 1 lakh mark and who probably are vying for a little bit more, or these are completely new customers that you aim to target?
It'll be both. So even for the existing customers, maybe an increase of 25,000, even if they reach that limit of 1 lakh, will bring them full. So we can give them more loans now, technically. Including that, I think new customers which were possibly not coming in the fold because of that 1 lakh limit, we will have more customers now coming in within that fold also. So it's both ways, so both for the existing customers as well as for the new customers.
How much of, in terms of new customers that you said were not coming to the fold because of the limit of 1 lakh, is that a sizable chunk of customers?
Well, I think if you really look at it, between the fold, when we consider microfinance, it technically covers about 60%, 70% of India, or 65 to 70% of India. Now that increases, maybe, I have a rough estimate, maybe another 5-10% more come within that fold, in terms of that. Plus, giving them additional, during the festival times, if you can give them more festival loans, because if the limit gets higher, you're able to give them, further loans, besides the usual ones.
I'm just wondering, Mr. Singh, would you companies like yours do some segregation of how many customers exhaust the full limit that they have versus how many haven't done that? Do you have a statistic like that?
No, we don't have a statistic like that, but technically what we've seen that the borrowers who have been there in the microfinance fold, they absorb the full limit of about 1 lakh of rupees, as per the credit bureau records and as per our records. But this is a rough estimate, but I would say technically about 90% of the borrowers which are there in the microfinance limit finally absorb the 1 lakh limit, So this is probably going beyond that,
So I'm just trying to understand this. One final question from mine, Mr. Singh. Technically, if 90% of the borrowers exhaust that 1 lakh limit, and 25,000 is not such a large sum considering the inflation that we have any which ways, inflation, whatever, this opens a room for almost nearly 20% additional growth numbers for a company like yours or any of your peers as well.
Yeah, so that's one. Besides the geographical reach, that is also one more factor which probably will there. So if you just look at the mere numbers, that's a 25% increase. But if you look at the geographical increase, there's still lower penetration across various states and various regions. So it acts both ways, And if you look at the past, I think the limit has increased from 50,000, which it started about a decade back, to about a lakh of rupees. Now it's gone to 1.25 lakh. That's why it's progressive. Finally brings more borrowers into the fold,
And the reach gets stronger. Thanks, Mr. Singh, for joining us. Appreciate you taking out the time. All right, that was Mr. H.P. Singh of Satin Credit Access. We've got the markets, though, not very happy about this. At least the Nifty Bank, which is down 500 points, picked up a little bit, I think 40 points improvement from the last time I took a check, but still under 28,000 by a good 100 points.
They're playing as per script, right? Maybe the markets were hoping for some surprise, more than 25 maybe. That didn't come about, so the trajectory of the last 3 sessions continues. And we are in for an interesting next couple of hours of trade. Let's see, with the world markets also doing what they are doing, it'll be interesting to see if we have further weakness, or do we show a similar pattern than the last few days, where in the last 1 hour, the market tends to bounce back a little bit from the lows of the day. So we'll be watching out for that. But that's the policy coverage on BloombergQuint. Thank you so much from Devin and me and the team that put this piece together. But stay tuned to BloombergQuint Live. Lots more coverage, including an interaction with some of the bankers coming up on the other side. Stay tuned.